house all day. It's been raining outside. Stocks are down. Thought I was gonna have a good stock day, but I'll tell you what, the stock market is hard to navigate. But this time, instead of pulling my money out, I'm gonna keep it in because I've learned that it eventually does go back up. So, I want to do that. Not gonna let it get me this time. I lost too much money. What up with you, Tiff? Tiff, I know you want to talk about something, relationship based, probably. So you pick the topic, and we'll talk about it while I make this music. How about that? You pick the topic, and I've been sending you messages on your Facebook Messenger, but I haven't got any feedback, broski. Not sure what's going on there, but but I won't be sending you no more messages, Miss Chicago. You know. Shoot. Won't be sending you nothing else. Yeah, I could tell. I'm like, oh. That's what we doing? Excuse me, Miss Chi-Town. You can't holler at a brother. Brother can't get no holler back up in this. I just wanted to know if you wanted to exchange some info. So next time you come to Ohio, you have somebody to visitate. But you want to act all non-visitational. I'm like, okay. Let me see how much battery life I got. You want to act all non-visitational. You gave me your phone number when? In the, is it in the Facebook Messenger? Or did you, no, you didn't email it to me. In the live? You put your phone number in the live? Honey, don't do that. You put your phone number in the live. You know what? I never got it. And that's probably something that YouTube does. I never got it. Just email it to me. I don't know. Do you email G? You know what I'm saying? I don't know what kind of communicate you use. You know what I'm saying? I don't know what you do. Snapchat, TikTok. I don't know what's going on over there. Oh, you do email? That is congruent? Okay. Thought I was just too old. God damn it. Okay, so take my email down. It's, let me know when you're ready. I'm going to start off with some kind of boom. It's TPOWELL 7938 at Yahoo. That's T as in Tom. My last name POWELL 7938 at Yahoo. Just go ahead and hit me with a what up tone and put your number in there. And I might call you. I don't know. You be working all the time too. You know what I'm saying? You might be one of them females that just be, excuse me, I do have a job, Mr. Sir. I could not answer your phone at 3 o'clock in the morning. I do's be having stuffs to do. Thank you very much. So I know, I already know. I already know what's going on in Chi-Town. I already know what's going on in Chi-Town. I said, what? What you said? Okay. Yeah. I know how y'all do. What you say? Corned beef and hash? You better not. Okay. Yeah. Yeah, I know how y'all get down. I know how y'all get out there in Chi-Town. Y'all ready to make it happen. Had to rewind. TPOWELL 7938. Yahoo. Oh, that's nasty. Whatever you say. That'd be nasty on some hip hop. You know what? Since you're from Chicago, I know you listen to house music, don't you? Is that your favorite kind of music, house music? See, I've been to Chicago before. Okay, that's what's up. Oh, you love jazz? Oh, okay. Okay. That would be, oh, if I was going to make some jazz. All right, let me, since you want some jazz, let me, kind of jazzy. I can make something that's hip hop kind of jazzy with a, at 120. So it'd be like boom, 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 boom. Bennett, something like that. I don't know. Something like that. I don't know. I don't. All kinds of love. The saxophone. Oh, okay. All right, I'll make a few of them. I don't know how long you're going to stick around, but I'll do this. I don't know how long you. I don't know how long you're going to be here. I don't know how long you're going to hang around, but I don't know how long you're going to be here, so I'm just going to throw something together. Okay. Oh, why is this hitting on the 8th? All right. Sorry, this is. Good morning. Yo, I checked out your stock. I did check out your stock. Yeah, I don't like this either. All right. I did check out your stock, homie. Can't get the, I don't like the snare, that's what it is. I gotta find a snare I like. find something I like. Sometimes it takes a minute, especially when you're throwing it all together. When you just throw stuff together, trying to look for the right. I know you like horns and stuff, but you're gonna have to hold on, Tiff, because I know y'all ain't got no patience out here where y'all at. Okay, you have to hold on, Tiff, because I know how you are. Y'all ain't got no patience. You gonna have to. You have to give me a few minutes. So I can throw something together. So I know you ain't got no patience. What did you think about the stock? I saw it go up. I saw it vacillate. I saw it go up $2. And I said, okay, that's a good thing. It hung out at $2. Went up $2 and hung out. I said, okay, it's got some promise. I kept in mind what you were talking about. I said, okay. Tiff, hold on a second. I got you though. You got to hold on. Tiff don't want it. Tiff ain't got no patience. Tiff ain't got no patience. You're about to have 55 stocks by the end of the month. See, I have a VOO and a VTI. That's in my, I have that set off to the side in my IRA. And I'm really trying to build that up. So I like to take my day trading money and then put it into my VOO and my VTI. Now I'm really working on my VTI because it gives you more than a VOO because it's international. So right now I'm trying to move a bunch of money over to that so I can average. So I'm trying to get it to where I can pay my rent in a week. So that's why I keep putting money into it. I mean, it's tough. It's tough with a VTI because you're not even getting 1%. You're getting like point. Well, you're not. Yeah. It's a little tough with it. Crypto is what I do in my savings account. Okay, Tim. Jumping in on the conversation. Let me change this base. It's a jazz base. Well, see, I got crypto, but I only got $200 of crypto. I don't like the way it goes up and down. You're looking for the long term? Yeah. That's why I move everything into my VOO. My VOO than anything. I'm not really concentrating $100 a day off of my VTI, I'm okay. You know what I'm saying? If I can do that, that means at the end of the month, I can take that money and pay my rent. And they just raised my rent today. So, I can understand diversity. Yeah, so that's what I do. I take my day trading money, and when it goes up and I get, $200-$300 off of that, I go ahead and take that money, put it into, my VTI, and I just let that keep stacking. Yeah, I'm trying to get that to where I can just pay that rent. And it won't be long. It won't be long. Won't be long. VTI, yeah, it tracks the S&P, but it does it internationally. But you gotta put on. Listen, I want to look into that. Do you special account or no? What I did was I used my VTI in my IRA. Yeah. Just look it up. Just go on YouTube and look it up because they can explain it better than what I can. But basically, you have a VOO and a VTI. Your VOO tracks your S&P 500, which is okay, but you're going to get less money on a return than if you use a VTI. Now, your VTI, both of those are through Vanguard. So if you have an account with Vanguard, that's fine, but you don't really need an account. But both of those are through Vanguard, so you don't have to pay to use them. Now your VTI, another thing, your VTI is cheaper than your VOO. So your VTI is somewhere around $200 a share. And this is so you can get into international companies and in the S&P. But it's different because some of them are, one of them is an ETF, and the other one is, like I said, somebody else can explain it, because one is an ETF, which is exchange trade fund, and the other one is, I think, like an MLP. So, but I know that the VTI gets you more money, and it's more companies. So, yeah, just look it up. Yeah, if you have a Vanguard account, just look up VTI and VOO. Both of them are through Vanguard. Yeah. Oh, you got a trust fund. Well, there you go. Well, listen, okay, so if you put so let's say that your rent. Hold on, I want to record this. me, big dog. Let's just say you have a VTI, right? You take your VTI, you dump it into an IRA, meaning you're not really gonna mess with it too much, right? You're just gonna go in there and check it, every now and then. Say your IRA is according to how old you are and when you can actually pull the money out. It's not made so you can go in and take money in and out and in and out. And you also cannot day trade with it, which means if you put money in your IRA and you see that one of your stocks is sinking, if you go in there and you take money out or move money around while the stock market is still up, meaning in between 9:30 and 4 o'clock on a weekday, then you can get penalized for that. What the penalty is, I don't know. First, they're just going to send you emails and say, hey, you can't do this. Nonetheless, the money is supposed to be in there and accumulate money. So if you have your VTI, like I said, you go through Vanguard, you have your VTI, but it tracks international companies. So basically, it's a mutual fund that tracks international companies. Your VOO is a mutual fund that tracks the S&P. Okay, so you're going to get more companies if you go with your VTI. Also, your percentage is better. So let me do this. I'm going to go into my account and I'm going to tell you what my percentage is, what percentage I've been getting on my VOO and my VTI. And I can do that without disclosing much information about it. Okay, so all right, so on my okay, so my VTI today, let me go back, my bad. What you gonna do when she says goodbye? All right. Okay. Yeah, so like I said, when you asked if I had a special account, yes, I do. I went and made an IRA is what I did. But I made a Roth IRA. So, there's two different IRAs. I made a Roth IRA. And it's a self-directed account, which means I do everything to it. Nobody does anything. But they do watch what you're doing to it so you don't violate any of the stock market rules or the bank rules. So it is being watched. So my VOO got me 0.18% today. My VTI got 0.29%. So it's a huge difference. So if you had $1,000, you can pretty much see where that's going to go. And you had 0.8, that means you were going to make $1,000 with $18. No, wait a minute. It's less than that. It's less than $18. It would be 0.8 if it was 1.8. 1.8 would be 18. 18. That means you got $1.08. $1.08 off of $1,000. With your VTI, you would have got $2.09 if you had $1,000 in there. $2.09. So it is it's a significant difference if you're and I mean this is constant. It's constantly beating the VOO. So I mean if you take $10,000, you know what I'm saying, and you just put it into a VTI, and it doesn't always give you that same number. Sometimes it'll go all the way up to 1.0%. You might get 1.9 out of it. I mean, you can get $20 one day and $50 the next day because it vacillates. But when I looked at VOO and I looked at the percentage that it was making over, I look at it over the day, week, month, and year's time. When I looked at it over like last Yeah, when I looked at it the span of last week, it went up like 4.9%. That's just the VOO. So let's just say you had, $1,000 on it once again, and it goes up 4.9. You'll be looking at somewhere what, $4 and no, you'd be looking at like $40 and 90 cents. So if you threw $5,000 on that, and you did that a week, now you're talking, that times five. So you just basically is $50. So now you're looking at $200 out of the week. So that's not terrible. Those also probably benefits from anybody on SSI. They also protect benefits. Yeah. And SSDI, they don't count as income increase. They are for special needs. One of them is more flexible. Yeah. Now, I didn't know that. I'm on SSI. And I'm a disabled veteran. But, so I wanted to point that out to you, just a significant financial difference, especially over the long run. Over the short run, it's like, okay, 20 cent, 30 cent. But when you start stacking and you put $10,000 on that, that's $20, $30 a day, my G. So, I mean, if you start mathematically looking at what the average is and you say, well, if I make 30, $40 a day, I'm gonna be looking at, $200, a week, easily, especially if the market goes up and stays up, which it doesn't. But, you'd be looking at 200 a week, and you start that times 4, 800, boom, there's your rent. You know what I'm saying? You just go ahead, boom, there's your rent, and you can move money around and actually use that money, but it's meant for it to stay in there. So, and also, another thing is, it doesn't self-invest like Bitcoin does. Bitcoin self-invests, which means the money that you say you put in $100 on Bitcoin goes up 5%. Now you just got $5. It'll say 105. It won't say you gained $5. If it just says you gained, would you like to know the account you can apply? Yeah, you can leave that information in there. It won't say, Bitcoin doesn't say you gained $5. It says you have $105. So it's self-investing. It's called the ABLE account. Yeah, definitely. Leave a link in the description. So it's self-investing. All these other accounts are not doing that. So if I made $10 today, it's gonna say you have so much money in here that is your base investment. This is how much money it is valued at right now, and this is how much money you made. It doesn't say that money is invested. So now you have to figure out when you want to go in and, close that account out, open that account back up, or basically sell, not close the account, I'm sorry. Basically, you're going to want to say, okay, I got $200 on my VTI, or it's at the end of the month, I got $600 on it. I want to go ahead and invest that $600 and then buy more VTI. Your VTI is $231.80. That's actually gone up. Your VOO is $412.63. So every $200, you can boom, bam, and get more shares, and and keep rocking it out like that, and it'll just keep stacking. So let me read your comments. How do I get into a VTI? Looked on Google, didn't see where to sign up. Okay, so what you need to do is call your bank and ask your bank about mutual funds. And what you do is ask your bank about a self-directed account. And you have to understand, a self-directed account, they don't go in and manage your self-directed account. You got to understand that. That's you doing it. So any mistakes that are made, you made them. Now, your bank your bank has investors, but those investors are at different levels. So if you call and say, hey, I want to know about a self-directed account and mutual funds, so on and so forth, the regular customer service is going to patch you to the investment team. The investment person is going to ask, how much money are you investing? And when you tell them, then they're going to pretty much give you to the person you need to talk to. Because if you're under $100,000, there's a person for that. If you're $250,000, there's a person for that. If you're $1 million, there's a person for that. You know what I'm saying? There's just different people that are going to talk to you on different levels, and they're going to give you a whole bunch of information that you're probably going to want to write down. And you're going to have to, the learning curve is not that steep, but it definitely helps if you keep up with it. If you look at people who are talking on YouTube and seeing what they're saying, if you do some reading, if you read through what an ETF is, what a MLP is. Like I just learned a valuable lesson. Cost me some money. I had Moderna. So what I did was I was making good money on Moderna, real good money. And I was like, okay, this is good, but I know the bottom is going to fall out. Well, the stock went up. And by the way, Moderna is a preferred stock. It's an individual stock. It's not a mutual fund. A mutual fund, like a VOO, has a bunch of companies in it. And you're buying a percentage of those companies, of that fund, or excuse me, of that share. So if 10 people decided they wanted to get in on a VOO and it cost $400 to get into, well, if I only have $100, so-and-so only has $50, so-and-so has $200, and whoever else makes up the difference, all of us have a part of that mutual fund and of that one share. That's why they're able to include so many people, because you're all buying a piece of the share that goes into a fund, which is a bunch of different companies. A preferred stock is one company, like LG. If you wanted to invest in LG, that's one company. So whenever that company goes up, your money goes up. If that company sinks, your money sinks. So it's just very different, and it can be volatile. Now there's different types of stock. There are you can have a meme stock. A meme stock is really volatile, but people make a lot of money off of it because they're watching what the stock does every day. A lot of people day trade. One of the most notorious meme stocks is GameStop. People, lost all that money because of Robinhood. It was because of GameStop. And there were 13 other stocks that they invested in, and then the broker came in and took all the money. So, there are meme stocks out there. And then you also have companies who are just now starting out and they're shooting through the roof. So you have some tech stocks. Me and this individual was talking about a tech stock, and he wanted me to look at it. And I did. I looked into it. And it is growing. That stock is right now, when I first saw it, it was $24. Now it's $26. He's saying it has a potential to grow to $600. Here's the problem, though. If you get a stock like Moderna Moderna did 78% in a month. It was just people just waiting for the bottom to fall out, and it did. It went up 17%, and the next day it shot down almost 20%. People lost a lot of money. But here's the thing, when it shot back up to zero, the amount that was being traded was less. So it started off being traded at $450, and it dropped down 20%. When it came back up, it was being traded at $382. Boom, thousands and millions of dollars lost just like that. Now, if you went ahead and sold because of this, you were like, screw it, I'm out. I don't want to deal with Moderna. Well, you just lost all the money because you didn't wait around to see what was going to happen. Well, now the stock just went back up to $4.11. But here's the biggest thing about Moderna: it's being traded a lot. So there's people who are selling off and buying it a lot. It's very volatile, and if you don't want to deal with that, don't go in that direction. Not every stock is doing that, but Moderna is doing that, and sometimes just somebody can open their mouth and ruin your whole day, and that's basically what happened. Dr. Fauci said something, boom, there goes Moderna stock. Elon Musk said something about Bitcoin. What happened? Somebody lost $25,000 in a heartbeat. So yeah, this is why people they want to go with stocks that are not so volatile. Then, well, your dividend stocks. Here's what I noticed about your dividend stock. All right, so I had a dividend stock. I had an ALP dividend stock. It was an Alerian fund. It was actually a fund. And it was happy birthday, Kobe. And it was an Alerian fund, which means make something new here. It was an Alerian fund, right? But here's the thing about this ALP. What it was through gas companies. It was a midstream company. Midstream companies are energy companies that are in between the consumer and the company. They're midstream companies. So basically, this company, I have no more tech stocks. I'm investing in Workhorse. Okay. Yeah, I follow some tech stock, but I don't have any tech stocks right now. Well, wait a minute. Yeah, I have one tech stock. And I have that tech stock because it's not doing too bad. And when I'm looking at the average that it's going up a week is in between 3 to 5%. I mean, not a week, a day. So, I mean, it'll drop 8%, but the next day it'll climb right back and up and it'll hit 7%. So, if you don't want to go along for that ride and it starts to sink 2%, if you can pull out and only lose a couple $100, that's fine. You just let it drop. It's going to, if it drops to 8%, as soon as it starts coming back up, you get back in when it's playing a dip, basically. You get back in and, put your money back in. About time it hits zero, you done already got your $500-600 back. And then the next day it shoots up 7%. You done made $1,500. That's the whole game, and that's just playing around with just $7,000-8,000. I mean, if you're playing around with $20,000-40,000-50,000, I mean you can make a killing. But if you're not watching it, and it drops and then it gets sold off, you're going to have to keep that stock until the price of the stock, not the stock actually goes up, but the price of the stock actually goes back up to where it was so you can get all your money back. Some people don't wait around for that and then they sell, and I made that mistake because I didn't think it was going to happen with Moderna. It was being traded too much. So I lost some money, and it just started a whole downward spiral. And I'm still trying to recover from that, but I think I got a better handle on it. Tomorrow is going to be a big trading day for me. It's going to answer a lot of questions, and it's going to let me know exactly what I'm going to do. Because if I wake up tomorrow and the market sinks on me even further, then I have to play the whole waiting game. Tomorrow's Thursday, so there's only 2 more days of trading, and I have to wait until that stock gets back up to at least zero where I have no loss, and then either sell the stock or stay in it because I know eventually it's going to shoot up 10%, and then I could go ahead and sell the stock. So that's just a game you got to play. But one of my stocks is Monday.com. So I've been following that for a minute, and I'm hoping it does good tomorrow. It didn't do too well today, so I'm hoping it shoots up, 6, 7%, so I can, make a couple $100 off of it, and then get up out of there. But yeah, so I think you guys. Oh, okay. You asked me about. Okay, so dividends. All right, so my MLP ALP from my midstream was doing good. My Larian fund was doing good, right? Then all of a sudden it hit a serious dip, and when and I made the mistake of putting it into. I put that into my IRA, and I should have never done that. For one, because of the way taxes are with it. So I took it out of my IRA, and I still tried to hold it. And I built it up. I had a couple grand on it. So I was waiting for the dividends. Every time I put money into it, I would calculate what my dividend was going to be. Plus, I would calculate when my dividend was going to be. It was a quarterly dividend, which means it comes out every quarter, 4 times a year. So and it was a dividend that was coming out and giving you either 6.8 or 7.5%. It's just, you could knock it. But when it started dipping on me, I start calculating the dip. And that's the important part about dividend stocks. It all depends on how much money you have on it. So when I was looking at it, I said, this thing is, it's going down right now. It's dipping on me. It's not making any money. It's costing me money every day. So if this thing is dropping on me and I lose the amount that I would make at the end added up to the end of the year, it's not worth keeping. So if you lose $300, but the dividend is going to pay you $300, then there's your break-even analysis. You're not going to make any money. And if it stays down, you're just not going to make any money. Even if it comes up and it breaks even, maybe hits 1 or 2%, you're like, okay, that's not good enough, because when it goes back down again, you're still losing that money. It would have to come break even and then actually go up and stay up to 3%. And it wasn't doing that. And that's why I got rid of it. I'm like, you're costing me money. So I had to get rid of a couple stocks, even a REIT. One of my REITs wasn't giving me what I wanted. Can you email me more? No, we can just talk, or we can video chat, and I can show you some stuff easier for me. Talk to me more, because I need to find the right direction for long-term wealth. If you're looking for long-term wealth, okay. If you're looking for long-term wealth, if you're looking at long-term wealth, you could be looking. There's a couple of things that you can look at as far as stocks is concerned, especially when you're talking about dividends. If you're going to look at a dividend stock, here's some stocks that are pretty decent. There's if look at Canadian banks. Canadian banks they're just not failing. They're doing good. Their average maybe 1 or 2% a week going up. That's not the big deal, but they're going to give you a dividend of 2.9, plus their dividend is going up all the time. So, if you got, I don't know how much money you're working with. That's not my business. You don't ever need to tell me that. But I'll tell you how to calculate, and it's just easy. You take $1,000 times 2.9%, and that's what you get. So then if you take whatever money you have, say it's 2, 3, 10,000, 20,000, you just go 2.9%, and then you take the answer to that number, and then you divide it by 4. That's what you're going to get. Now, if that stock is going up, if you look at it in the what it did last year, and if that stock is continuing to go up, which most Canadian banks are, then this is something that you want to hold. You want to hold that bank. You want to go and say, okay, I'm going to take, Federal whatever of Canada, and I'm going to hold that bank, because I know that this is going to be constant money going in, and you want to constantly feed that stock, because those dividends, for one, they're eventually going to go up. The percentage, even if it's just evening out, that's still good because you're still getting a dividend. You see what I mean? It's basically it people have to what they do is they go, okay, growth stock or dividend stock. That's pretty much what people are doing. They're going a growth stock. If I look at Moderna's a growth stock. Or let's just say AMC. AMC is a meme stock, it's a growth stock, which means you're betting on how much it grows. So let's just say you look at AMC. AMC, and you look at what it's done this week. It's gone up 3% today. I think it actually did. It goes up 3% today. Yesterday, it was down 2%. The day before that, it was up 1%. When the week closes out, it looks like you're going to have a 5% gain. 5% gain. So regardless of what it did at the end, if you didn't do anything to your money, you kept it the same, that you're going to have 5% more than what you had last week. So you go, okay, I got 5 Gs, boom, I'm going to have 5% more. That's $250. Boom. I'll take it, and then you look at what it's done in the previous month, and you're like, okay, this has gone up 15% in the previous month. Then you're like, okay, well, I'm going to go ahead and gamble on that. It's going to give me 15%. So you keep it the same. You have $5,000. It's going to go up 15%. That's going to give you $750. That's what it is. If it goes up 15%, you keep it for a whole month or whatever, $750. This is what they bet on. But let's just say that stock for some reason drops. Somebody says something about it or whatever, and people say, you know what, I want to trade it. You got $5,000 in there. Next thing you know, that stock drops 20%. It just tanks on you. 20%. You're just like, oh, hot damn, like what happened? Well, there's a couple things that might have happened. Somebody could have put their mouth on it. It could have. There's just so many things that could have happened to make it do that. So now you gotta think. I just lost 20% of $5,000. Well, you didn't lose it. You still have it. But nonetheless, it's down 20%. What do I do? Do I want to sell it or do I want to keep it? Well, if you look at the history of that stock, for one, it's not going anywhere. This is why betting on new companies is harder, because that company could go out on you anytime. But if you're betting on something like AMC, well, what are the chances AMC are going anywhere? Plus, the world is opening back up, so you're like, hell no, I'm going to keep the stock. And especially since you lost 20% of it, which is somewhere, I don't know what 20% of $5,000 is, but it's a significant amount of money. And you're like, no, I'm going to keep the stock. You keep the stock. That stock eventually works its way back up to zero. Now you decide whether you're going to hang on to it. It's going to go back up and give you your 5% again. That's the whole game with those stocks. And of course, any crashes or glitches like in 2008. That's the game with them. Some people like dividend stocks because there are dividend stocks that pay you monthly. There are dividend stocks that pay you monthly, bi-monthly, biannually, and annually. Some of these stocks can go from 1% all the way up to 15%. You have a dividend stock that pays you 15%, there's a good chance that company is not going to be around very much. Also, no tech stock, most tech stocks that are beginning, they cannot pay you a dividend because it's taking money out of the company. The opposite is said for REITs, which is investing in real estate. They have to get rid of 90% of their money and give it to the people who are holding their shares. So you're making money, off of the REIT. Say you have a REIT and it goes up. You're looking at it go up 1%, maybe 2%, during the whole week. 1 or 2%. You're like, all right. 1 or 2%, no big deal. Well, you look at what it done last year, and it went up 33%. You're like, I'm all in. Well, if lumber, all of a sudden, the price of lumber goes up, then what? Like I said, somebody can put their mouth on your stock, and next thing you know, it's not trading as much. So you're looking at a possible 33% in your stock, but nonetheless, the price of lumber is going sky high. You know, and these are just some things you got to keep up with. And it's just like, okay, well, no, you're looking at your stock and it's sinking. Well, that's the reason why it's sinking. You got to find out, do I want to stay in for the long run or do I want to get rid of this REIT? And it depends on where it's at. Like it is an individual stock, but nonetheless, well, I'm sorry, it's not an individual stock. A REIT is like a mutual fund. It is investing in a bunch of companies that are in the real estate. There's different types of REITs also, but they're all invested in a bunch of companies that are in on it like a mutual fund. So if you were going to invest in an individual company, you would go MI Homes. You would look up what their ticker number is, uh, and then you would say, okay, I want to invest in MIH. I don't know if that's their ticket number, but that's just ticket number is how you identify a company on the stock market. So you go MIH, you look that up, you put that into your whatever you're investing, say however you're investing, you're using Robinhood or you're using Webull or you're using Cash App. I use Cash App. You go to the search circle and then you put MIH in there. They find it, MI Homes. You look at it. You look at, I'm sorry, guys. You look at what the share is, and you say, okay, I want to invest in it. You don't only look at what the share is. You go down and you look at what the company's been doing. So let's just say you are interested in MI Homes. Well, MI Homes was in on that terrible scandal that happened when they were doing pretty much price gouging people who couldn't afford to move into a home. Yeah, you're all about the long run. Well, you need a VOO and a VTI. And, a couple of mutual funds to do you good. Stay away from preferred stocks. Don't go with them. Put it all into a Rothi, you know. So MI Homes was involved in a scandal. So what happened to their stock? So I'm saying, so there's just some things, but when you give me a call, I'll explain more to you. And if you video call me, I'll let you look at some, help you look up some stuff on the internet. That way it'll be like you can see it, you know where to go to and stuff like that. But hold on a second, my nose is running. Yeah, MI Homes and REITs and all that. Lots of good stuff, lots of good stuff. Hold on a second, guys. His nose. All right. Getting clumsy. There's a lot of information on stocks, and the stuff that I'm telling you is it's it's kind of skimming over it because then there's how to choose a company that you want to go with. Especially if you're looking at deeply investing in that company and you're trying to figure out how long that company is going to be around. If that company is making any money. A lot of people go with VOOs and VTIs because those companies have been around for the longest time. So McDonald's, Walmart, they're not going anywhere. Kroger's and stuff like that. These companies aren't going to go anywhere, but they're not going to yield you a buttload of money. They're just not. So, when you're trying to, you have these people who say, I made $50,000 in one day. Well, yeah, it's highly possible, but those stocks that they're using did not come from a VOO or a VTI. Those stocks did not come from a mutual fund. They did not come from a REIT. They were all preferred stocks, and it's all a gamble. They may have made 50,000, but they might have lost 150,000. It is that's just the way it is. Another thing is, if you're going to get into the stock market, whether you're long term or long run or short run, I am both. I'm long run and short run, but I have more money in the long haul than I have in the short haul. I take the money from the short haul and I put it into the long haul. That's what I do, and sometimes I use it for a daily living. So if I can get a stock that's going to pay me 5% of whatever I have in it, I'll take that stock and I'll divide whatever I get for that day in four ways. So at the end of the day, once I sell the stock, I'll go ahead and let's just say that I made $100. I'll take $50 and I'll invest it right back into the principal. Now I have $50 more. I'll take $50, I'll put it into a savings. I'll take $50, I'll put it into an IRA, and I'll take $50 and put it into a checking account. All right. Now, one of the things I'm going to start doing here recently is my savings account only yields me 0.001% a year. And I'm not happy about that. So, what I'm going to do is start taking money that I would put into the savings account. Once my savings account hits a certain limit, I start taking money and just allocating it to other places. But what I'm going to do is I'm going to open up an online savings account, but it's going to be a high yield. Now, there are some high yield savings accounts, but you can only put so much money into them, usually around $1,000. But nonetheless, they'll yield you 6%. You know what I'm saying? So people keep asking me about this refrigerator, but nobody wants to buy it. So they'll yield you 6%. You're about to use your hand sanitizer? Yeah, I got me some and some alcohol right here. Give me some of that, brother. Yeah. So your high yield. So you have your high yield savings account. Your high yield savings account is going to give you 6%. Now you can also have a CD. I have a CD. So when I have money that I really don't want to touch at all, but I want the money to make money, I put it into a CD. I don't touch that money whatsoever. It's your rainy day, well, that's not your rainy day. It's your emergency money. So you take that and you put it into a CD, and there's all type of CDs. You can have CDs that are like step up programs, which means the longer they're in, the more that they make. And then you have CDs where for one, all CDs have a certain amount that you have to have in them. You could have $1 into a CD, and some banks will be like, fine. Other banks will be, other CDs programs, you might have to have $10,000 into them. So whenever you ask your bank about a CD, you're going to say, how much do I have to have in it? And what percentage is it over how much time? Because you can put $1,000 into a CD, but if you only have $2,000 to your name, it's a good chance you're going to need that $1,000. If something happens, you have to move suddenly. If that's all that you have, you might not want to put it into a CD because you're going to get penalized for taking the money out. You just might as well keep that into your savings, or you might want to say, you know what? Let me get a CD that only $500 and it's only for a year instead of a CD that's for 47 months, but it gives you a high rate. So your $500 is still making money. Another thing about CDs is you cannot add to the CD. Once it's in there, that's what it is. It's $500 for the next year. Boom. That's what you're doing. You're going to save that money for the next year. It's going to make you 1.5% of whatever. You can calculate whatever that's going to be. Then you're going to, come out with, 500 plus your 1.5. Well, if you have money that you're definitely not using and you don't want it, Well, it's not a bad company so far. It went up and down. I was watching it. But if you have a CD and you trust and you're like, you know what, I'm gonna go ahead and put, $3,000, $4,000 into the CD, that's gonna give you 4%. So, you're looking at something that's gonna give you 4%. You're looking at over $200 each year, plus $8 after the second year. That's what it's accumulating. It's $200 plus eight, plus eight, plus eight, plus eight each year. You're looking at coming out with $800, something like that, plus to the good after your 47 months, which is 1 month short of 5 years. So if you don't need that money for 5 years, toss it into a CD. It's going to give you your 4%. There are other CDs that are going to give you 5, 6, and 7%. The problem with some of those CDs is I didn't recognize who the bank was. Some of them are subsidiaries of a bank. I'm like, no, I'm not doing that. I'm going to go to my bank and say, what CD program do you have? I went to my bank and they say, yeah, our CD program starts at $10,000. I said, I can't get into your program. So I had to find a bank that I trusted that had a lower rate for a CD and or for a self-directed account. So if you want to IRA, no, I'm sorry, for a robo account. A robo account, basically, it's investors who are investing your money into that robo account. I tried it. I didn't like it. They weren't making me any money. I was making more money doing it myself, so I canceled my robo account. Well, some companies, banks want your robo account to start off at $10,000. I'm like, no, I'm not about to give you guys $10,000 and no, I'm good. So I said, no. I found a robo account, starts off at $500. I was like, let's go. I end up switching that money into my IRA, and I've been going at it ever since. Every day I'm on here trying to figure something out. So, you guys got any questions for me? Tiff, you're going to have to give me a call, and I'll help you out, help you break some more of that down. Because I'm going to repeat a lot of what I just said, but we'll be actually able to go into it. And I don't know what your schedule's like, so you're going to have to let me know what your schedule is. Because I have an open schedule, not unless somebody is, trying to get a fridge from me. I'm going to start with H&R Block. Yeah. Which, here's what you do. Here's what you do. You start off with a phone call. You don't start off and just grab a stock because you could lose your money. That's what you do. You start off with a phone call. That's how I did it. And I invested my you just got hired for a second job, so I will have to let you know. Yeah, there you go. See, what I did is I invested my money that the government was giving me. When they were handing out them stimulus checks, I took that last $1,400 and I was like, I'm going to invest this money. I made videos about it. And what I did then was I started calling first to find out how to use the stock market. That's what I did first. I was like, let me call. So I started calling a bank, having long conversations with bankers and stuff like that. They're very drab, unexciting people, but they're going to tell you what it is. And, then that's how I found out how to open, my accounts and whatever, and just kind of looked and see what accounts I liked and what I didn't like. And, okay, I didn't know if you left or not. And then that's how I looked at what I liked and what I didn't like. And I didn't start investing until May. So June is when I actually, yeah, well, April. So May is when I started, you know. My account says April, but I just put money in there. I thought it was just going to grow by itself. It didn't do anything. So May is when I got on the ball. So I'm brand new at this. I've only been investing for a very short time, and I've won some money and I lost some money. Uh, and every day, like I won some money today and I lost some money today, because I took a chance and it didn't turn out like I thought. But I'm going to leave now. I'm going to look into accounts. Yeah, go ahead. So you can, yeah. So I made some money today and then I lost some money today. I'm like, I made another mistake. But uh, I didn't totally lose money today because I didn't sell. If tomorrow when I wake up and I decide to sell and I'm still at a loss, then I lost the money. But if I hold on, and plus okay, so like Dick's Sporting Goods went up 14%. I have an open schedule too, cuz I I don't have anything to do, anything to do but invest. Uh, so Dick's Sporting Goods, every now and then I like to catch a flyer, which means I would look on my Cash App and see what company is going up fast, because some of them will go all the way to 30%. Even if you catch, even if you catch it, at 15%, and you put $1,000 on it and it goes up to 30%, well, hell, you just you know what I'm saying? You just got 15% of that. Uh, so Cash App only allows you to trade like 5 times. So if you invest in something that's at 14% and it's going up, and you can't trade anymore, which means you can't get out of there, and it sinks on you down to 11%, well, you just lost, 4 or 5% because you couldn't get out because Cash App won't let you get out of it. So that's the hard thing about day trading there. I'm gonna have to figure out another way to day trade. But yeah, there are laws when it comes to day trading. But if you're trying to do the long haul thing, don't get into day trading. Just don't. Just you're on the right track. Stick to mutual funds and stick to uh, just slow moving funds. Don't get into anything that's a fast mover, because it can make people rich and it can put you out on your ass quickly, very quick. I mean, you hear stories about people losing everything. Well, that's because they were day traders, you know, and they put it all on the line. And I don't look, like I'm telling you, like I'm the type of guy who walks around and collects pennies. Like I'm that dude. You know what I'm saying? When I go on my little walks, I'm looking down and picking up the pennies and quarters people leave behind and putting it in there, and then taking it to the bank. And I have a truck with a trailer on the back of it, so I'll ride around the neighborhood looking for refrigerators and stoves that people are getting rid of, and take that to the junkyard and get 30, $40 for it. And what do I do with it? Boom, stock market. So yeah, don't put everything into the stock market because you can lose it real quick. Uh, Stick with slow moving stocks. If and you're young too, I mean you're 32, so I'm in my 50s. So I'm gonna have to stop day trading. The best thing you can do is collect cans in Oregon. You get, oh damn, damn, that's all right. Yeah, well, see, where I live at, this apartment complex, that's one reason why I haven't moved. Because okay, so they just raised my rent again, right? They raised it $60, right? Somewhere around there. They raise it. They raise it $60 or so. I think I'm running out of battery. They raise it $60, right? I'm like, okay. Hold on a second. Let me get my battery charger. All right, so they raised my rent $60. What does that mean? All right, now I got to pay $60 more. Also, does that mean a bunch of people are going to leave? And when people start leaving, what does that mean to me? Is I'm about to make some money because I wait until they leave, and I walk around this twice a day sometimes in circles, walking around, people looking at me like I'm crazy. What I'm doing is I'm looking at each apartment that's getting emptied out. And then I know that they're going to remodel, which means they're going to throw away their stove, the refrigerator, and the dishwasher, and the cabinets. I go and collect those items, except the cabinets. I don't get those anymore. But I get the stoves, refrigerators, and the dishwashers, put them on the back of a truck, and I used to sell them, but I don't sell them anymore. I put them on the back of the truck, and then I take them up to, where are you at? You're in there. I take them up to the junkyard. Once I take them up to the junkyard, boom, I get a couple dollars for it. You know, sometimes $70 in a day. Can't beat that. Can't beat that at all. You know, and I add that to my, whatever I did on the stocks and shoes. Sometimes I can come out making, a couple $100 in one day. Plugging something in. Yeah, I mean, you can get I know some guys who really go at it with the junkyard. I don't. And when I get bored, I ride around and look for stuff in other neighborhoods, and I find them. Because people are doing a lot of remodeling. Because everybody's buying all this property. You know. But yeah, so that's what I'll do. And take it up to the junkyard. Boom. $30, $40. Pocket that $30, $40. Hold on to it. Hit the bank. After a good, week or two. Give them the money. Boom. Take that money. Put it on, a preferred stock, or now I'm putting everything into my VTI, so now everything is going to go to my VTI. I want my VTI, like I said. Yeah, do that. Do that. Yeah, so, you just throw your petty cash in there. You have a second job. If you're working that second job, and listen, don't go out and buy new shoes. Don't New shoes cost what, $200? Don't do that. Take that money and throw it into your VTI. Don't do that, because if that VTI hits $5,000 and it starts yielding you about 5 years, I'll be at 600. Oh yeah, yeah, you're looking at your thing going up. Well, that's awesome. It's kind of like betting on Bitcoin. See, I have a couple dollars in Bitcoin, but I really don't know what to do with Bitcoin, but I know it's going up. Yeah, so yeah, you just throw that money into your VTI and you just keep doing it. Boom. Or you throw it into, yeah, throw it into a dividend stock. I was doing that for a minute. I got my dividend stock up to, you know, to a nice bit until it started going down on me and I got rid of it. But the thing about it is, if you put, let's say you have 50 bucks and you put it into a dividend stock, the minute that you put that money into a dividend stock, that company owes you. So let's just say you pull out before a quarter's over. They still register that you had $50 on whatever company it was, and they're going to give you 2.9% whatever you had. They owe you like 60 cents. Because I was getting dividends all over the place. I was like, where is this coming from? But they were low dividends because I was only putting like $50 into a stock, $100 into a stock. Well, you're just not going to get too much out of that. But I was just testing the market to see. And then I started putting it on preferred stock. And that's when I started making money. And then that's when I lost a chunk of it. And I was like, oh, I don't want to do this anymore. So now I'm going back to slow moving stocks, going back to some dividend stocks. But once I build up my VTI, I'm going to go ahead and then I'll get some mutual funds that will give me dividends on it, and that's how I'm going to build up my whole IRA. I'm not going to use REITs or anything anymore, not in my IRA, but that's what I that's what I highly suggest because they're slow movers, but nonetheless, when you build them up pretty good, you can get a. I mean, 2.9% is not terrible, you know. I mean, you want to get 4 or 5, but it's just not terrible. Plus, the banks, those Canadian banks, they're not going anywhere. Uh, yeah, you just want to keep rocking out like that and just keep doing it. And I mean, once you get yourself $10,000, $20,000 on it, you really don't have to go to work anymore. I mean, you should, but you don't have to because it's just gonna $20,000 in a VTI, or let's just say okay, let's look at it this way: $20,000 on a dividend stock that pays you 3%. 3%. You start calculating that. So if if it's a grand, it's gonna give you what, 30 bucks? 3%. Yeah, let's calculate $20,000. This is right. Yeah, $20,000. 3. It's going to give you $600. It's $20,000. It's 3% of $20,000 is going to give you $600. You're looking at this. So you're looking at that in a dividend. So let's just say that's what you're going to get a year, right? Well, that's not including the growth. So if you have that same $20,000 and the company grows, and this is why some people like REITs, because some of them grow like 33%, 30%, 31%. But let's just be honest. Let's just say that the company grows 20%. This is where the real math comes in. That's $4,000. So at the end of the day, 4,000. So it's $4,600. Booyah! I'm saying if it grows 20%, you'd be looking at $4,600. and you double that, it's lights out. Like there are people who live off of the stock market. They'll put $100,000 into a IRA, flying. They're flying. I mean, they're doing $10,000 easy. Just getting that money, boom, and then they take it, flip it right back into something else, boom. It's lights out. Next thing you know, they're looking at 1 million, but just in a very short time. So I'm gonna look up a REIT for you. All right, so here is a REIT. It tells you what it is, but I want to look up what one has done. Nah, I don't want that. I just want you to look up. See, I don't have a particular name for REIT, but I had one and I didn't like it. But it was still getting me money, but it just went down on me. I was just like, you're costing me money. All right, so there are a lot of REIT stocks, right? I'll just pick one. Now this stock is going to tell me real estate income comp. Let's see if it's going to tell me what it did. Okay, so this is telling me what it did. Let me turn this around so you can see it. All right. So here's your stock price. This is where it trades at. It trades on the NASDAQ. That's how much the share is, $70. This is how much it went up today, 0.09. And this is probably how much it's been up a month. This is who the founder is. This is when it was started. This is the location of the start. This is how much money they have. It's how much money the company is worth. It's how many employees. This is the name of it. See if it's gonna. Yeah, and there's more information on it. So that's how you can start doing your research. Probably don't want it now, but that's how you do your research. You say, okay, I want this stock right here. Now let me see if I can open up my this guy's gonna say no. You got 200. Do I want to sell it for 200? Okay, fine, you can have it. Boom, deal's done. Come pick it up tomorrow. All right, so I want to show. Let's see if this is gonna open up the. All right, here, I want to show. Still with me, Tiff? I want to show. I know this is boring. This stuff is boring. Boring. I'm gonna log into my Cash App. Oh, it's not gonna. Never mind. It's not gonna let me. forget it. Just let me. See if it's gonna let me look up my stock. All right, so screw it. I'll look up a stock that kicked my ass. Kicked my ass. I lost so much money. I learned a lot, but I lost a lot. But what I didn't do was I didn't bet the farm. I played around with more money than what I should have. And I'm sure if I had a woman, she would have been all on my cage. And I would have told her, I would have said, it's my money. You need 12,000 to make 360,000. Good luck with that. So, 1,200 to make 360,000. How you gonna do that? What kind of math you got going on there, buddy? What kind of math you got popping off? What you got going on, bro? Shoot. Serious numbers. I know if I ever see that much money, I almost have 2,000. I need another 10. Like I said, I looked at that stock today. It went up and it came back down, bro. Yeah, it's raining out here too. You guys are only 5 hours from me. All right, let me show you this. All your lights are off? You scared? Don't worry, we'll wait for you. We'll talk to you. All right, so. Don't be scared. I'll stay on the phone with you. I'll stay on the phone. Nah, man, I lost money trusting. I trusted in Moderna and I got sacked. Okay. So, this is the stock market. Basically, the stock market numbers. And it's basically showing Moderna stock, which is 397. But when I had it, it was 4 something. Oh, at its height, it was 413, which is right there. Then it dropped down to 380 something, and now it just came back up to 397. So, yeah. It's one of the most traded stocks. So it went up 4% today. Well, yeah, man, take that chance. And then it gradually came back down to 3%, and it started to work its way back up towards 4 again. So that's what it did today. But a couple of weeks ago, this thing sank all the way down here to 20%. And that's what killed a bunch of people. It just tanked. Is it a good stock? I was making good money, but I lost all the money I made on it. And when I say I was making good money, one day I made $1,600 off of it. That was I didn't have to do nothing else for the rest of the day, even though I did. I made 1,600 off of it. But me thinking that it was just gonna, I was gonna keep getting money off of it, I also put it into my Roth IRA. So when it sank, it ate up $300 on my Roth IRA as well, and then it ate up thousands on my Cash App. So to say that I was, disappointed, I was like, okay. And then the next day it just kept, and I kept trying to get it back, and I have not been able to find that same rhythm. And it's just cost me, a couple $1,000 easy. And so tomorrow is going to pretty much be, Friday is going to pretty much be my day of reckoning. If I can't get back on rhythm by tomorrow or by Friday, I'm taking all of it and I'm throwing it all into my VTI, and I'm just gonna build that thing up to, I don't know. I'm just gonna build it up. I'm gonna build it up and build it up, build it up. I'm not even gonna think about it too much as far as where I'm gonna stop at. I'm just gonna keep going with it because it's just the best thing for me to do. And then I'm gonna go and get all that money that I lost back. That's what I'm gonna do. I'm gonna work my tail off like I've been doing, and I'll get it all back. But this time I won't put it into any preferred stock. I don't care what stock is going up when. I'm just not going for the okie doke anymore. I fell for it, and it's good for some people, and for other people, it's not. And I am older, so I don't have the luxury. For one, I don't have the finances to play like that. I really don't. Oh, damn it. Would you come on? Why this thing is doing this? But I can't, you know, I'm hurt when I lose a quarter, let alone thousands of dollars. But that's the stock market for you. Like I said, the good thing is I didn't put all my eggs in one basket. I made sure that I had money going in different places. And some of those monies are making money, and so I have to slow build it back up. All of what I lost. I mean, it'll take me a long time to to get all that back, but nonetheless, it's highly possible if I stop the hemorrhaging now. But if I keep playing around and keep losing $200-300 a day, it's just not going to work. So Friday is my day of correction. If everything doesn't start going up and start stabilizing for me, then on Monday I'm getting totally off of it. Yeah, I like it's just a game of numbers. I like it. I like the excitement, but if I'm in building season now, like I have to stop the silliness and that, oh, this stock is going to go up and this stock is going to go, when they're not doing that. I'm trying to look at $650 into your trust fund. That's what's up. Is it making money? I mean, is it just sitting there? Because if it's just sitting there, that's not doing anything. I mean, it's good that it's a savings, but it's not doing anything. I don't know about trust funds. I'm poor, so I don't know anything about trust funds. Uh, but what I do know is even the bank will give you 0.01%. I mean, it's not worth anything because of inflation, but still, you'll get that. If you could, if you could get yourself at least 2% somewhere, then you might be looking at something. You know what I mean? You can get yourself 0. No, that's not gonna work either. 0. No, 0.002%. That's not gonna do anything either. You need to be at 0.1% to for it to do something. So it stayed at 6,000 when I was submitting. Uh, it stayed at it. Yeah, but it's yeah, but it okay. What I'm asking you is, what percentage is it making? Because if it's listen, if you got money in a savings account where it's just sitting there, that's fine. But if you got $6,000 that's sitting and it's making 2%, 1%, it's making okay. The biggest problem with money is it's constantly depreciating because the cost of living is constantly going up. So if you have money that's just sitting there and it's not, what's happening is you're losing money. See, you think your savings account, you think you're, see, you think you're making money or I don't even know if he's still here. But if your money is not making money, then it's losing. Just automatically. It's a depreciating asset. No matter what. A quarter today. Yeah, I know you're here, but I don't know if he's still here. Anyways, what do you want to talk about, Tiff? You want a video chat? So you can show me what you look like? You want Facebook video chat? Sometimes it makes. Oh, God, no. Oh, okay. Oh, damn. I didn't know it was that bad. I was just trying to keep you company, but damn. You really trying to stay hidden, aren't you? Okay, I won't ask you that ever again. Sometime it makes. Okay, so. Yeah, okay, so it's a. No lights can be on. Oh, yeah. My bad. Yeah, I thought it was just. You was on it. Yeah, but that's true. No lights. Okay, so it is making money. Yeah, well, that's good then. Wait a minute, a month, 450 a month. It's $6,000. Sometimes it's making 450 a month, and sometimes it's making. It was basically had a for 4 years, and it went to $5,000. Something don't sound right here, bro. So how were you feeding it? Through your job, like a 401k? I mean, it sounds like it's like a 401k. So you were feeding it some kind of way. And that's what it sounds. It sounds like a 401k. That's what it sounds like. Because you put money into a 401k without even knowing it. And then the market takes, well, the 40, people get stuck by lightning with a plant. What, damn. And then the market pretty much, basically it's that money is going straight onto the market, and then it's accumulating money, but it wouldn't. I don't know. I don't know how you're doing it, but that's what it sounds like. And that's cool if it's a 401k. Uh, I don't have a 401k. I am my own 401k. There's my 401k right here. Yeah, so Friday I'm gonna have to all the money. Not gonna mess around and lose any money anymore. Trying to get my money back. That's the worst thing about gambling. Taking that gamble. You're like, oh, I know I can get it back, and you got itchy fingers. Next thing you know, all your money's gone. It's like, nah, bro. If you just keep sinking on me, I'm just gonna wait till you hit zero, and then I'm out. Just screw it. You know. Can't take no chances. My stock went down. Today I lost 340 bucks. I just knew the stock was going to go up because it went down yesterday. I said, man, this stock is going to go up. Damn stock went up and then came right back down. I said, screw this, man. I got to wait until tomorrow, 9:30. I can call you if I got your email. Let me see if I got your email. Yeah, I did. Trash man wouldn't get the trash today. All because he wasn't moving. Yeah, I got your email. But that makes the world go around. She said, oh, God, no. I ain't even do my hair. I ain't got my bonnet on or nothing. Oh, Lord, Lord. I just want to see what people look like because they see what I look like. But I know women, y'all got this thing. Oh, I want you. But I'm a whole guy. I be trying to look at the women folk. I be like, girl, stand up, turn around. Yeah. Okay. Shoot, I'm a guy. You know, I'm only going through so much chatting on the phone. Like, all right, well, let me see what you look like. Chicken wings. You look like me, but you're probably a lot younger. You sound young. Trash man wouldn't get the trash today. Oh, that doesn't give me much hope. Yeah, you sound like you're in your 20s. You sound very... No, I'm going to call you, Tiff. I'm going to get on the phone with you. Eventually, you know. Nah, you sound 20-something, bro. You sound younger than a month. You sound young, bro. 41? Okay, 41. There it is. I'm around 41. You right in there. You get the young ladies and old. You get the young ladies and the older ladies. Got the grandmas coming at you. You get the ma, the me-ma, and the young mamas. 41? Absolutely. Still got some guff to you? Hit the weights a little bit. All right. Still got some guff, so you ain't got that bad back yet. You ain't got that sacroiliac. Right there. My T3. Your T3 ain't hurting yet. Yeah, sciatica. You ain't got that going on yet. Yeah, I remember when I was 41. Yeah. I was still out there running a little bit. Uh-huh. Still talking to the women folk. The women folk, they'll tell you where you're at. Then my body hit that slow decline. That was it. No more women folk. No more women folk. Phone didn't ring anymore. Used to call up old women folk I went they don't want to talk no more. Oh, I'm busy. I got stuff to do this. I got kids and grandkids now. I ain't got time for you, Mr. Tony. I was like, damn. You can't come and see nobody. Nope. That's it. Young kids laughing at you. Little young girl look at you and be like, ugh. I'm like, damn. You starting to take breaks though. Notice his hard workouts are becoming much more. Yeah, they hard. I went in the gym today, right? Yesterday. I ain't even mean to bench. I went in there. I did some of these. Did some of these. Did a little bit of this, a little of that. Hit the bench. Threw up about 335. Some of the shortest sets I ever did. And I got up out of there. Hit the little thing to do your back. Hit your back up. And I got the hell up out of there. You know what I'm saying? Worked on my stomach a little bit. That spare tire. Shoot, I was done. Everybody in there was looking all thin. You know what I'm saying? I was like, look at you thin folk. I'm just thin. I left. Jumped in my avalanche. That was it. Well, I need my strength because I move around heavy stuff. But man, I be pulling muscles. I got to pull muscle on my back right now. You know, I throw up that 335 in a minute though. Bam! You know what I'm saying? That's all I got. Oh, I hit some legs too. I be doing the legs though. I get some legs in there, but I just can't do what the youngins can do. They be bending over and hitting the toe with come up with the one leg and I'm like, man, I'm falling on my face. I try that. Shoot, I in there try to do a pull up or two. I'll be proud of myself if I can get two of them in. I'll be like, one. Two, you can forget it for three. I'm gonna come about right here for three. That counts for me. I'll be like 1, 2, barely off the ground. I'm 289 pounds. Yeah, there ain't much pulling up going on over here. You see them cats will be out there, good, coming all the way up to the chest. And nah, brother, it ain't happening over here. I ain't 200 pounds. I'm 289. Yeah, well, that's you. That ain't me. Once that car accident got me, it was a blessing and a curse. Listen, when I got into that car accident, I was able to erase $128,000 off of my student loans. As a matter of fact, I was able to get out of my student loans completely. Do I drink? No, but I eat fruit. $128,000 gone. They wiped it out. Because I got on disability. They said, you have to stay at this financial level for the next 3 years. And I did it. I stayed right at that financial level, and they said, you no longer owe your student loans. I was like, yeah! Yeah, that car accident changed my whole life. Guy hit me head on, pow! The girl I was talking to on the phone at the time didn't want to talk to me no more. I told her I got injured because I was making plans to go see her in California. She ain't want to talk to me no more. I was like, you dirty dog. Shoot. Can't make love to the women folk like I used to because I got that bad back. They like, You know how women do. They be talking about how bad men are women. Oh, you can't pick me up no more? You 230 pounds. So, what Hell no, I ain't picking you up. You waiting more in the refrigerator. So what? I ain't coming back here though. Oh, Oompa Loompa. Get your big booty on up out of here. Girl. All that. Oh, whoosh. Tendonitis. Oh yeah. Cause I used to be a distance runner. My damn tendons. Yeah, I got that too. So I can't run whenever I jog. My damn patella tendon hurts like a mug. I'll be like, oh my God, this hurts so bad. And be trying to strengthen them up. No, can do. They hurt. I used to run around this whole complex, a couple miles. Shoot, forget that now. Shoot, I mean, I was huffing around today. Shoot, now that now I'm gonna be laid out. I'm gonna be laid out, bro. I can't do none of that. So if some woman come over here looking for some action, I'm gonna have to warn her. I'll be like, I just want to tell you right now, I got about 5 minutes. I got about 5 good minutes. What you want to do with that? Let's get it. Ready and go. Girl, that's it. Oh, ringing of ears. Yeah, tendonitis. I had that before. Took some stuff. It went away. No, I got tendonitis. Yeah, about 5 minutes, girl. You got about 5 good minutes with me. You better be happy. Them old women don't. They're like, them young girls will be like, yeah, let's go. Them young girls, man, they will beat you. Man, remember in The Color Purple, dude was making love to the little teen girl and he died on her. I be looking at that all the time, like, damn, is that gonna be me? Am I gonna finally get married and then get no? Oh man. I was looking at that like, how you just gonna die in the throes of passion? Now I'm just like, oh yeah, I can see how that happened. oh yeah. Yeah, that could happen. It's bad, bro. It's bad. I'm 53, man. I can still pick up something, but it's just you know what basically happened? I had an ear and it started going up into my head. So they gave me stuff for that. But there's some over-the-counter stuff you can take for tendonitis. Yeah, for the ringing of ears, there's over-the-counter stuff you can take. Tiff, you asked me a question. Do you? Yeah, I use it when I lift weights and when I'm moving refrigerators. Yep. I wasn't for the longest time, though, and my back was killing me. And another thing I wasn't doing was drinking a lot of water. But there's a masseuse who lives right across the street from me, and she was like, you need to start drinking more water. And you know how we do, because we tough. Shoot. I started sipping more water. My back started feeling a whole lot better. I told her, I said, you was right. She's like, yeah. Shoot, I got a whole case of it downstairs. I carry some in both my trucks. Yeah, start drinking more water. My back started feeling better. I'm like, okay. Because I was crawling in bed like the Tin Man. Oil. Oh my God, it was some hurting day. I was making some money though. See, when I start delivering, I make money. When I don't want to deliver, I don't make that much money. But I don't feel like delivering anymore. I'm like, you pick it up. People don't like that. But when I say I'll deliver, they'll wear your ass out. Carrying up these 2 flights? Nah, hell no, I'm done with that. Nah. That's why I'm so stuck on putting my money into some type of mutual fund or something. Yeah, that's why I'm so hell bent on making money on the stock market, because My days of doing this are numbered. You know, it's just worn on me, and just not excited about the pain. But there's there's some good. Here's one thing that's good. Here's one thing that's good. I have a degree. Yeah, I have a whole degree. Yep, and believe it or not, especially now with COVID doing its thing, people still they're looking for people to get out there and to produce something. I don't want to work for anybody. I was going to be a volunteer for an ombudsman, but it makes my head hurt thinking about working for somebody. Like it literally gives me a headache thinking about working for somebody. It does. It just my head starts to hurt immediately. I'm like, this is not for me. So I have to find something else to do. When do I plan to retire? Well, I can't. As much as I want to. There's really no plan. Uh, I, yeah, there's no, I don't really have a per se plan to retire. Uh, I want to hit. My financial goal is to, I don't know, get to. Uh, I'll never stop hustling. I'll never stop hustling. You know, as long as I can, put something on the back of a truck and the uh, junkyards are open, I'm always going to be hustling. You know what I'm saying? But what I was thinking about doing was making my own company and contracting through the government. But the government is just, they're on this, everybody needs to do this, everybody needs to do that. So I would say retirement looks like around 65 for me. And I would have to have, yeah, I'm looking at having, if I can put away $10,000 each year, some kind of way, if I can just, get a mutual fund that helps me do that, plus, whatever I'm doing, if I can get 10 G's a year, I would be okay because that's really what I'm about. And if I can get close to 100 G's, or I just need to be in a place where my money's making money. So if I can get, hell, if I can get $50,000 in a good mutual fund, I'm happy with that. I'm not completely satisfied, but yeah, if I can get 10,000, if I can get $50,000 into a nice mutual fund, something that pays me, if I can do 2% a week, absolutely. Yeah, absolutely. If I can grab 2% a week, You know, I'm happy with that. But it's hard. Yeah, it's hard. It's not easy at all. That's a lot of refrigerators. It's a lot of dealing with customers, and it's a slow growth. You know, because when you're looking at 30, $40 a day, that's a slow growth. You know, and at one time, just a couple of weeks ago, I was, doing 300, 400. And was like, what I'm saying? Like, yeah, I'm gonna go. I thought that I was going to, uh, like, I was gonna go up in a tax bracket. I thought that I was gonna, my aim was doing 270 $70 a day, and sometime I was doing, more than that. I was doubling that. I was like, okay, because I wanted to do that because I know that would put me in the $100,000. I wanted to be able to say, okay, I made $100,000. Well, I can't say that right now. You know what I mean? So that's really what my goal was, and then I wanted to take that, uh, just those earnings there, and then go ahead and flip them, and eventually maybe getting some real estate. I don't know, just getting the different stuff. But I'm not too excited about real estate. But yeah, so it was looking good for a minute there, and it's not looking terrible. It's not looking terrible right now. It's just not looking like it's just yeah. I just accrued too many losses recently, and I just have to get them back to what I'm saying. But that's the game that you play, and I tell you what, I'd rather do this than go and work for somebody, so they can tell me I'm fired again. I don't want to hear that no more. I don't ever want to hear that. I don't ever want to hear that. And then not know why I'm being fired just because I'm being fired for no damn reason. You're just fired. Nah, nah, G. So I would rather, you know, take my chances the way I'm doing now than step out there. Now, what I could do, contract for somebody, but still be my own person. That I could do. But as far as, you 100% work for the company, nah, nah. I would have a meltdown. I can see what eventually I'm going to do, what I'm going to have to do, is I'm going to end up being an inspector. My degree is in healthcare. So I'm looking at being some type of health inspector. But I might have to go and take a couple more classes to do that. But yeah, that's what I'm really interested in, like getting into health inspection or something like that. And then just being a freelance guy. I don't want to. I don't want to work for you. I want to work with you. You know, I come in, I inspect, I leave, you pay me. I'm a contractor. You know what I'm saying? So that's what I really want to do. Dip in, hit you with the, ah, okay, all right, ah, okay, bam, bam, talk at you, and dip out. And there are some people who do just that. They dip in, come in, look at the place, da 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 da, and dip out. And they belong to no one. They are their own people. They come in, let you have the business, and they work for they contract through the state. But I want to contract through every state. I want to be able to go to California and drop in on a health facility and just, hit it with the business. Yeah, my name is Bob. Here's my credentials. Boom. I'm gonna go ahead and just do a quick inspection, and then I'll be out of your way. Don't even. Yeah, act like I was never here. You know, boom, boom, boom. Fill out my report. Go back to my hotel. Fill out my report. Da-da-da, 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 da-da-da. Catch a plane up on out of there. That's it. Catch a plane on out of there, all paid for by the state. That's what I want to do. Because I know there are people who do that. All right, I'm going to call you now.